With President Trump about this, he says, sure, the leadership may be talking about Kamala Harris, but the workers know. The workers know that he's going to keep jobs here and not send all these jobs to China like this climate change agenda has done.
Well, first and foremost, if you're a blue-collar worker in the union, even if you're doing really well, you've been decimated by inflation versus the leadership who are handsomely paid. This has been a much tougher economy to live in under Joe Biden, under Kamala Harris, than it has been under Donald Trump. And then you take another step back, look at the billions and billions of dollars these car companies have lost based on the electric vehicle mandates. The Biden administration wants 50% of new cars sold by 2030 to be electric. Right now, we're at 8%. For us to get there will be absolutely devastating for the auto industry when you're losing on average between $30,000 and $40,000 a car that you make and sell domestically. Not only are they losing money hand over fist, these cars take 30 to 40% less labor to produce. That means less jobs. They use a lot less parts. We're buying these batteries mostly from companies in China, which have a horrific environmental footprint every time you make them. These electronic vehicles aren't necessarily even better for the environment if you're looking at it from a CO2 perspective. It can take upwards of a decade for them to be a net positive. How many 10-year-old 12-year-old, 15-year-old electronic vehicles do you see on the road today? You don't. These cars don't last. This has been an unmitigated disaster for the members. And, you know, these people aren't stupid. They're realizing what's better for them and what's better for the country.
Of course. Absolutely. Hannah, how do you see it?
Well, you know, I personally love it. Biden has spent the past 4 years completely bowing the knee to unions, doing everything he can to try to help force people back into union memberships, doing things like the PRO Act and trying to undercut independent contracting. So watching them turn on him is absolutely excellent.
Jobs report, and it showed that, you know, it was something like 1 million plus jobs created for non-citizens and 1 million plus jobs lost for American citizens. This is the last jobs report.
Yeah, Maria, you haven't created a job for a native-born American since 2018. It's absolutely devastating what they've done to this economy.
Yeah.
It's greater government control in every single direction you look gives you disastrous results. There's no secret to this.
No wonder now we're talking about a half-point cut instead of a quarter-point cut in rates announced tomorrow. Stay with us. We'll be right back. The word on Wall Street, meanwhile, top investors watching your money. Let's get into it, including crypto. Joining me now is CFRA Chief Investment Strategist Sam Stovall. Also with us this morning is Mike Lee. And Mike, I want to kick things off with you, get your reaction to Kelly's reporting. And the reason that I asked her about whether or not this is going to derail the regulatory conversation is Cowen and Company has a report out today saying Crypto Monday, Trump crypto effort could present political risk to the crypto agenda and derail the emerging bipartisan view of how crypto should be regulated, which could stymie the efforts to establish a crypto regulatory regime. So how does it play into what regulators are talking about in terms of the boundaries and borders of crypto?
Well, look, it's really hard to put your fingers on what the regulators are trying to do with crypto because the SEC through Gensler has just been all over the map and has been as anti-crypto as possible, where you have BlackRock, who's extraordinarily influential, pushing Bitcoin ETFs, Ethereum ETFs. So where this regulatory framework is going to go, I mean, that's a little bit beyond me. However, another crypto platform, I mean, this is a good idea to come out there. So it's easy. I mean, right now it's very difficult to pay for goods and services with cryptocurrency. So having a platform like the one President Trump is proposing, there are advantages to it. And look, you've basically destroyed the value of the dollar over the last few years. You've printed an unbelievable amount of money since the beginning of COVID. And so crypto is a thing. It is here to stay. It is not going anywhere. And, you know, to the degree that other coins come up and you want to be able to lend them out to other people and make money for that through a platform like this, have at it. I am a Super Bowl as it pertains to Bitcoin. I prefer, you know, if you want to own the crypto directly. I'm a user of the Gemini platform, which is run by the Winklevi brothers, or the Winklevoss twins. So like, I don't know how big a news the Trump family coming out with this sort of platform is.
Okay.
I mean, there's a lot of these that are out there. It's good to see more competitors come into the space. I mean, it's in the end that'll be better for the end user. But look, it's just an example that this crypto is not going anywhere. How this regulatory framework comes out, I mean, to the degree it can prevent fraud and FTX type circumstances or setting up these fake coins where the founders just run away with your money. I mean, you'd love to see more of a regulatory framework for that. But again, I don't know how big of news this is other than it's President Trump is behind it.
You know, I'll tell you, the election is so important on so many levels, but this too, you know, rides on the election, because if Gary Gensler is still in charge of the Securities and Exchange Commission, the regulatory environment is very, very different than a Trump win and a different SEC chairman. Sam, I want to talk about risk here, because look at where crypto is. You know, we are on risk on right now, whether it's crypto, stocks, everything else. The Fed cuts rates 50 basis points tomorrow. You're going to hear massive critics that it is all political. You know that.
Yeah, well, look, I think a 25 basis point rate cut has been baked in at this meeting for some period of time, particularly for that purpose. Look, Jerome Powell, to say that the Fed is not political, he raised rates really aggressively as soon as he got in office, had a conversation with Trump, went the other way. Okay, into 2021, when he wanted to get reappointed, waited way too long to get aggressive with combating inflation, let the balance sheet grow extensively when there was no need to, and put us in this hyperinflationary scenario we got in. So, look, I think it's uber political any way he does it.
Yeah, well, look, I mean, give me a break. Trump has been very clear he's not going to reappoint Jay Powell. He wants to get reappointed. There you go. Sam Stovall, thank you, sir. Great to see you. Mike, you're with us all morning. We're grateful. We'll be right back. Mike Lee, look at this market in the triple digits rallying, and yet this number is, okay, up 0.1%.
Yeah, my thought is that the Fed is in a really precarious situation right here, because I don't think they believe the labor data. I certainly don't. I think the labor market is much weaker than being advertised. Obviously, we just went through this 818,000 revision. But if you look at things like the JOLTS, the survey response rate is half or less than half of what it was just a decade ago. So at this point, the Fed is really between a rock and a hard place, in that we have persistently high inflation, far above where they'd like to see it. However, the credit card data is looking just like a declining labor market. So my question for Stephanie is, what's the point of 25 basis points? Are we going to attack inflation, or are we going to get ahead of the labor market?
Good point.
Because if you're going to do something, do 50 basis points or 75, and then reverse it if inflation comes roaring back. What are your thoughts?
Yeah, go big or go home.
Yeah, the problem with that is, what does the market do? You know, what's the reaction to news that the Fed cut and then has to reverse and tighten again? I mean, I think that would be disastrous for the market. There, you know, the 2-year is 200 basis points below the Fed funds rate. We've never seen the market aggressively discount like that since the early 1980s during the double dip recession. This